My next guest says that Apple is emerging higher after a 3-month pause. And how high can it go? For that conversation, I want to welcome in Todd Sohn, Director, Technical Analysis at Strategic Securities. I know one of your top stocks here is Apple. You still like it, right? I was reading about Apple glasses. Maybe we'll hear of that from the Worldwide Developers Conference next year. Apple is and seeing big demand, more than people expected, for the new phones.
Yeah, hey, Nicole, nice to see you with Apple and a lot of mega cap growth too. The way we're looking at it is you had these names peak 3 months ago. They have basically done nothing since. They've corrected through time rather than a major price decline. And that's about as bullish as you can get for momentum-esque names. And so we think Apple's starting to reassert itself here and accelerate. It is timely on the long side, and we would believe that a name like this and some of the other mega cap growth names are what's going to carry the market higher into the first quarter of next year. So again, Apple, timely long, worth a look here.
I see what you're saying. You know, it certainly has had a nice run. Year to date, it's up about 80%. But everybody wants something Apple for the holidays. I mean, we know that for sure, right? That's something that we've seen. But at 131, I saw a price target of 160. I mean, do you think it goes to 160? Do you think it goes upwards of 200? Where do you think this thing's headed?
Well, if there's anything we know is that momentum is something you don't want to fight, whether it's for stocks, whether the indices, 160 definitely in play. If you have this broad tape persist into next year, I don't see why you can't start to test 180 and 200. I would not rule it out. We've seen what momentum can do for names like you were just talking about Tesla. So I don't see any reason why not that Apple can't continue to climb here and start to hit those numbers you were just saying.
I saw about Sonos. There were some outperform ratings on Sonos. It's a name you like. Tell me more about that one. It's been a winner this year, up over 60% this year.
So what we like about Sonos, it IPO'd about 2 years ago, was a poor performer, right, these last few years. Until the last few weeks, momentum has started to take control. And what we find interesting about Sonos is that we feel it's overlooked in our conversations because it's only about a $2 or $3 billion stock. Yet I'd say most people are familiar with the products. But compared to some of the IPOs we've seen recently, Airbnb, DoorDash, whatnot, we find Sonos to be overlooked. It's just starting to work. We're a believer in this name. We're a believer in the momentum emerging from it. Is it a pinch stretched? Of course, but we think you use any sort of weakness over the coming months to start to accumulate here. Again, it's a small cap name. It's overlooked. It's not in any of the major indices. So if you're looking to get away from some of the large IPOs that have all the attention, take a look at Sonos.
Some of the other names that you had on your list, Sarepta Therapeutics and the biotech, you had Shopify on there. What is it about those names that grab your attention?
So for Shopify, similar scenario to Apple, right? A growth name that peaked in, I believe, July or August of this year, has done nothing for 5 months, broke out earlier this week. So the trend is reasserting itself there. That is very bullish. Use any sort of pullback here to accumulate again. And then with Sarepta, biotech's been a great group up and down the cap scale, particularly down the cap scale. Sarepta's right in the middle there. An inconsistent name for the last 2.5 years, but just starting to poke its head higher to new highs. We think that's a 2.5 year bear market, inconsistent market, whatever you want to call it for that name, coming to an end. It's in a great group. That means it's a time and long. You want to get involved there too.
I love some of the other names that you picked. World Wrestling Entertainment and Madison Square Garden. I mean, these are both really fun picks. Why do you have that going on in your portfolio?
So if you're looking to get away from Apple and Shopify and Tesla, all these mega cap growth names, you take a look at some of the reopening plays, right, that we like to call them. WWE, 70% decline, just absolutely brutal over the last couple of years. Early signs that this is starting to bottom. There's a decent chunk of short interest involved in the name. That's helpful fuel for like higher. It may not be straight up. It's not going to be vertical. This is a process, but we think it's a timely name to start and get involved in. Similar scenario for MSG Entertainment, right? They're both involved with putting on live shows. Audiences are needed. So again, part of the reopening play. That's a hopeful scenario for next year. But that one's also starting to improve. It was a spinoff, so it's technically a recent new issue here. Hasn't really done much. So we think they're both timely. And again, if you're just looking to diversify away from some of those large cap growth names that have had great runs and we think are a little bit timelier, those are two names that are absolutely worth a look too.
Yeah, and you talk about the reopening trade, and they have exposure to Las Vegas, the MSG Sphere in the Venetian, at the Venetian. So as people get back and they want us, right? So that's pretty cool too. I didn't even know about that. So that's another part of the Madison Square Garden entertainment umbrella. All right, Todd, thank you. Always great to have you on the show. We appreciate it.
Good to see you too, Nicole.
Todd Sohn,
Thanks.
Director. Thanks. Technical Analysis at Strategas Securities. Thank you.